Hello and welcome to this specialist trading instructional video of the buy sell line. Now this is an extremely important video to watch. We always recommend that this be your very first video when going to the educational portion of our website, because it's really going to set the framework for everything to come with all of our strategies and learning how to trade with the specialist edge. So this is an extremely important video to begin with, but before we start, I want you all to please take a second to view our disclaimer, because I'm going to show you a lot of facts and figures today, but remember, we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a second to view our disclaimer, and then we shall begin the presentation. Okay, why don't we begin? Let's start off with some of the buy-sell highlights. This is the topic we're discussing today, our extremely important buy-sell line. Now, I feel, in my opinion, it is the single most important tool that you will be using here at Specialist Trading. That's how important it is. As a former specialist, I see how this tremendously turned around my own trading, and this is what we want to share with you as well, so that you'll be trading with the specialist edge. One of the reasons why it's so important is because it instantly takes the guesswork out of your trading. And that's one of the problems with so many traders today. They feel as if they're on the wrong side of the market, or should they have taken that particular trade. And you know, when you go into a series of losses, you begin to guess or begin to hope that things will work out all right. Well, what this tool does, although it doesn't guarantee that you're going to have a successful trade, it takes out the guesswork when you enter into the trade. Now, this is very simple to use, but it's extremely powerful. And to show you how simple it is, you only need to ask yourself one question prior to using this tool. And in terms of it being powerful, well, you can apply it to virtually any time frame and any market for that matter. You can use this on a 5-10 minute chart, on a weekly chart, a daily or monthly chart, and you can use it in any market you'd like. You can use this with the Forex market, with futures, with stocks, currencies. It really doesn't matter. It seems to work very well with everything applied. Now, because of this importance and because of this tremendous power it has, I feel it's the main component of the specialist edge. That's why we begin our training with this video, the buy-sell line, because it's the main component of the specialist edge. It will always start you off on the right track, right from the beginning. All right, with that said, I'm sure you're asking by now, well, what exactly is the buy-sell line? I mean, this seems really important, so what is it? Well, I said earlier, it's very simple but extremely powerful. The buy-sell line is simply the 50-period simple moving average. That's all it is. It couldn't be any more simpler than that, but let me tell you how powerful it is. Now, before each trade, you only have to ask yourself one question, but you have to ask yourself this question every time before each trade, and that is, where is price in relation to the 50-period simple moving average, or the buy-sell line? That's how simple it is, but let me show you how important that is. But remember, write down this question if you have to, or just, I want you to memorize this before you pull the trigger for any trade. As a specialist, you have to be very disciplined and have to know your plan. And this is the first in a series of steps you'll have to take, but you always must ask yourself, where is price in relation to the 50-period simple moving average? And the answer you'll get will only be, you'll only have two choices for an answer, because if price is above the 50-period simple moving average, well, you can only buy or go long the trade. And if price is below the 50-period simple moving average, well, you can only sell or go short. So do you see how this automatically eliminates any reason of doubt if you're on the wrong side, or whether you want to take this trade or not, or, well, I lost last time. In fact, to see how important it is, all you have to simply do is go back and look through a series of other trades you had, and especially losses, but you can look at winners as well, and just see if you were in sync with this tool. I really feel that most likely if you were going through a series of losses, chances are you were trading when the stock was below the 50-period simple moving average. And if you were shorting and stock happened to be above the simple moving average, well, you can probably guess what happened. The stock continued to go higher if you had a loss. Now, I'm not saying that this doesn't work 100% of the time. Nothing does in the market. And every trader on the floor, every specialist I know knows that there are no guarantees with anything. But you're going to be putting the odds in your favor if you are in sync with this indicator or this tool. Okay. Let's show some buy-sell line examples. First of all, I want to start off with an overview of how this tool really works and how it actually looks. Now, it doesn't matter if this is a stock, a forex, a currency. What we're just basically trying to show you is the principle of when price is above this dashed green line, the 50-period simple moving average, you see how it has the pretty much just the free excuse, or for lack of a better word, just nothing standing in its way to go up higher, higher and higher. Now, therefore, we only want to be looking for buy setups or areas in which we can go long. But once we begin to steadily be below that 50-period simple moving average, as you can see, it's no longer wise to be long, but what you want to be doing now is actually be on the sidelines or looking for selling opportunities. So you see, this is very important. This is not about structure. We're not actually giving you a trading strategy to trade here. Simply because a stock or forex or currency is above the 50-period simple moving average, we're not telling you automatically buy it. That's a buy signal. We're just telling you that's the environment you need in order to look for a buy signal. That's the first step that must be met. That's the first requirement, that in order to go long, you have to have price well established above the 50-period simple moving average. And in order to go short, you need to have price well established below. And also, you can tell if you're on the wrong side or not. If you're in a trade and you see that, or I should say more of a long-term position, look back and see if you're holding some stock for years and years, and if it's gone below the 50-period simple moving average, well, most likely you don't want to be in that. You don't want to be in that stock. And vice versa if you're short and something has gone up above. So this is once again a great tool. And remember, it's not an exact science. Simply because the stock trades below, let's say, or 1 or 2 days below the 50-period simple moving average, that it's telling you it's a look for shorting now. You need to have some well-established area that you know for sure in your mind that we're pretty well below that 50-period simple moving average, and unless we have a tremendous rally, it doesn't look like we're going to be going up there above there soon. So 1 or 2 days, such as this example right here, is not going to make a big difference. You need to have a set number of days where you're either above or below to confirm that you're now on that side of the buy-sell line. All right, let's look at an actual example here in Walmart. As you can see, here's the 50-period simple moving average line, and price is well established above. So once again, it pretty much has a free rein just to move up and go higher, and therefore you're only going to be looking for buying opportunities. Remember, there's no structure here yet. We're just laying the groundwork for looking for buy opportunities. And in the same way, with stocks going down. GS, Goldman Sachs, I'm sure a lot of people got hurt in this stock with the current financial crisis, but had you known this tool well in advance, the way a lot of specialists on the floor are aware of this particular tool, you could have easily said, well, I'm not buying this stock because it's below its buy-sell line. There's no reason to even consider buying or holding on to the stock if I have a position. I should only be looking to short. And you would have saved a lot of money or a lot of sleepless nights, more likely. As I said earlier, we haven't shown you any structure. What this is so far is just the guidelines of knowing when to be long or short. But I want to show you an example in AKM right now where we are obviously above the 50-period simple moving average, but where these green arrows are actual signals that were generated by our strategies, by specialist trading strategies. And so, although we don't want to go into them right now, those are going to be in future videos that you should be watching. I'm just telling you how it works. These are examples of where you would have actually gone long. There are no shorting examples in this, shorting trades, I should say, in this example, because price was well above the 50-period simple moving average. But if you were interested in shorting, you could have shorted KOH. Now, as we said, this can work on any time frame. Here's a weekly chart of KOH, and roughly at the end of 2007, we were well established below the 50-period simple moving average. So it was automatically telling you, this tool was telling you that you should in no way be long this stock. You should actually be looking for short opportunities. So where the down red arrows are where our signals actually generated shorting opportunities for its traders. Now these are weekly signals, so they had a little more risk associated with them, but a little more advantage too if they were profitable, and they were in these examples. Let's look at a real long-term example here in RIM, R-I-M-M. Now this is a monthly chart, and just to show you how well this same principle works regardless of time frame or whatever market you're trading. As you can see here, going all the way back to 2004, price was well above the 50-period simple moving average. All right, so what's that telling us? It's telling us that if we're going to be doing anything in RIM on a monthly long-term investment, we can only look to buy. And if you wanted to know where to buy, well, Specialist Trading furnished about 4 very nice buy opportunities, as you can see with the up green arrows. Let's say you're a short-term trader. Well, here's a 5-minute chart in Apple. So let's ask ourselves the first question. Where is price in relation to this dashed green line, the 50-period simple moving average? Well, obviously price is below. So what does that mean? We can only look for shorting opportunities. All right? And as I said, even though we're not going into structure at this point, we're just trying to give you the principle of the first tool of specialist trading. We just want to show you some examples of how well we could have traded this had we applied our strategies to it. These are actually 4 signals that our strategies would have generated to go short on a 5-minute chart. Now remember we saw RIM before? Well, let's look at a 10-minute chart. Say you wanted to trade that on a 10-minute basis. First question you ask, where is price in relation to the 50-period simple moving average? Price is obviously above, so we're only going to look for buy opportunities. And in this day or so's trading, we had 3 very nice buying opportunities established in RIMM. Now lastly, I think the real value in terms of my own trading and investing in this tool is as an indicator, meaning that we can use this to look at the trend to see what the market is actually doing. Now here's a weekly chart of the S&P going back all the way to 2006. And as we can see, if we start at the beginning, the 50-period simple moving average, the buy-sell line, was predominantly established above the line. So we pretty much knew that it was okay and safe to be long. And at this point right here, roughly at the end of 2007, we had some oscillating back and forth, so it wasn't clear yet as to what side to be on or what signals to take on a weekly basis. But obviously, in the very beginning, the first quarter of the year of 2008, we definitely were well established below the dashed green line, the buy-sell line. So at this point, if you were long any stocks in your portfolio, it would have been the best, according to our rules, to liquidate them and exit out of all of them and no longer be long. And what you would have been doing now would be either being on the sidelines or looking for shorting opportunities. Now, had you followed any bits of that advice, you would have saved yourself a lot of trouble and a lot of sleepless nights once again. You could have roughly exited the S&P or any trades roughly around the 1300, 1400 level and virtually missed the next 700 points on the S&P going in 2008, or roughly about 3,000 or 4,000 points on the Dow. Now, if you were an aggressive trader, you would have been looking for shorting opportunities, and I assure you there were a lot of nice shorting opportunities that pertain to our strategies that generated sell signals. Or you could have, if you were more conservative, you could have said, you know what, I don't really like to short stocks, I just want to be on the sidelines, and you would have missed about 4,000 points on the downside, where most of the people or investors that are still in the market, they continue to hold. We all have heard the horror stories of the financial crisis here, but if you were savvy enough to know of this indicator before that, you would have been able to hold on to a nice portion of your nest egg. Okay, so let's review. I'm sure as you've just seen in the examples how you can see how this tool is the single most important tool we have here at Specialist Trading. This is our foundation where everything takes off from this. This is the starting point of all our strategies, of all our education, of all our learning tools. And it's so important because it instantly takes the guesswork out of your trading. You're no longer going to have to guess, or if you start to go into a series of losses, start to second guess or doubt your trading decisions. You can tell right off the bat if you're on the right side. Now, once again, this does not guarantee that the trade will be profitable or the investment will be, but at least you're taking the guesswork out and you're putting the odds in your favor. As you saw, this is a very simple tool, but it's extremely powerful. It's so simple because all you have to do is ask yourself one question prior to every trade. Before you pull the trigger, whether it's a long-term investment or a short-term investment, simply ask yourself, where is price in relation to the 50-period simple moving average? That's your buy-sell line. And remember, you can apply this to any time frame and any market if you'd like. You can use this on Forex, you can use this on stocks, futures, and you can use it on a 5-10 minute chart as you saw in the examples, or a weekly or a monthly chart. Doesn't really matter. So as you've just seen, this is why I feel this is the main component of the Specialist Edge. This is the groundwork. This is the foundation of specialist trading. This is how you start off each and every trade. And our goal here at Specialist Trading is to have you up and running trading eventually with the Specialist Edge, so that you are trading with that professional type of mindset. Now, if you have any questions, if this didn't sink in all the way, or you still have a few more questions about exactly how to use the buy-sell line, don't hesitate to email me at stephenprimo@specialisttrading.com. And I'll get to you just as soon as possible. Now, in closing this webinar, please take one last second to view our disclaimer. Remember, we can in no way guarantee that any of the results I showed you will be repeated in the future. And as you're taking a moment to view our disclaimer, just one last reminder, we want you to view these videos as often as you can. We don't just want you to see them once and then go on to the next one. So feel free, if you have any questions or if it didn't sink in right, to view them as often as you like. That's why we record them and archive them for you, so that they'll always be available if you have a question or if something that makes sense, and to go back as a studying tool. So we start off with this one, with the buy-sell line, and then we'll continue on to concepts 1 and 2. Thanks so much for joining us. We'll see you at the next video. Bye-bye.